Hi and welcome to Swiss Codes Daily Market Talk. It's Monday, February 3rd. Trump imposed 25% tariffs on Mexican and Canadian imports, a 10% tariff on Chinese imports, and intensified his threats against the European Union. The US dollar is higher this morning. The market sentiment overall is on the floor, really. The US crude is up, but oil companies will likely be under pressure. So it's a bad way to begin a week. So as I said, the world wakes up to the new week a bit concerned, I would say, as Donald Trump went a step beyond his tariff threats and actually imposed 25% tariffs on most Mexican and Canadian imports and 10% tariffs on Chinese imports, which will actually take effect as soon as from tomorrow. A move, I believe, will certainly backfire to the US and end up in tears for everyone. But it will first add volatility and some chaos to the financial markets across the world. Now, note that the consequences of some of the tariffs will be severe regime on some sectors. For example, the president of the Canadian Automotive Parts Manufacturers Association, in other words, the president of a Canadian industry that will be one of the most heavily hit sectors in Canada from the Donald Trump's tariff threats, said that the auto sector in Canada is going to shut down within weeks, as at 25%, absolutely nobody in their business is profitable by a long shot. So there is no way they will be able to pull this off. So the first market reaction on Monday's open is obviously a swift move toward the US dollar. The Mexican peso gap opened to the lowest level since March 2022 against the US dollar, and the USD CAD jump opened and flirted with the 1.48 level, with the prospect of melting Canadian exports toward the US, which is one of its biggest trading partners, and shattered growth outlook for Canada, which will require strong support from the Bank of Canada probably in the coming months. Now, note that the latest growth numbers from Canada were already looking quite bad. So look at Friday's numbers, but obviously with Trump's tariffs, things could snowball toward worse in a very short period of time. Though we have a downside pressure on the Canadian dollar, we also have a doji candlestick formation on both the peso and Canadian dollar charts, which actually hint at some hesitation on whether, for example, the USD CAD should travel toward the 1.50 level, knowing that such tariffs on the US two biggest trading partners that together stand for more than a quarter of the US imports, will boost inevitably inflation in the US, cut the dream of further Federal Reserve rate cuts short, and will perhaps require rate hikes to deal with such a decent price shock in the US, and that will come probably quite rapidly. So the hawkish shift in Federal Reserve expectations on these tariffs and flight to safety explain why the US dollar is wildly in demand this Monday morning. But the US tariffs will also weigh on the US growth expectations. There is no magic, and the latter should eventually limit the US dollar's upside potential and also weigh on equity valuations out there. As such, while the European markets are looking bad this morning, they are set to open deeply in the negative. The US futures are also deeply in the negative territory as well at the time I'm talking here, as the US tariffs will severely increase many companies' costs and as such hit their profit margins. So in numbers, the SOX 50 futures lost as much as 3.4% early in Asia. The S&P 500 futures are down around 2%, and Nasdaq futures have already shed more than 2.5% about 2 hours before the European opening bell. So things are looking quite red this morning. And as per Europe, Donald Trump ramped up his tariff threats, and the European Union said that it would retaliate. So the euro dollar is also heavily sold this Monday morning at the weekly opening bell. But here as well, the doji candlestick formation so far hints that the Trump trade cannot be one-sided. The US will also suffer probably big time from such dramatic tariff increases, so there is no other way out than uncertainty. The Europeans won't go out and buy American cars and American agricultural products, I'm telling you, and even less substantially because, well, Donald Trump wants them to do so and penalize the continent. So the situation, the global trade situation will probably get very, very ugly and very, very quickly. But again, the monstrous tariffs will immediately weigh on the US growth outlook as well and perhaps prevent the US dollar from fully benefiting from Donald Trump's America First policies. It will, in my opinion, rather end up in America alone. So, what a time to be alive, really. One man is destroying the trade dynamics of the entire world. Now, coming back to the fundamentals, Friday's PCE numbers from the US came in line with market expectations, while the softer than expected German inflation number that was released last Friday as well reinforced the dovish European Central Bank bets that are stronger than ever this morning, probably with the fear that Donald Trump would wake up one morning and simply impose a huge tariffs on European imports as well. Now, anyway, overall, the upside pressure in the US dollar will likely remain in place until the dust here settles. But the news of retaliation from the biggest trading partners, the fact that the tariffs will likely boost inflation in the US and hit the US growth prospects as well, will quickly build some barriers in front of the US dollar bulls path toward the north as well. And obviously, the risk of sentiment will perhaps encourage a correction in the equity markets, in equity valuations on both sides of the Atlantic Ocean that actually trade near their all-time high levels, and even good and robust earnings from the companies in these locations could not improve the global market sentiment this week. Now, on the earnings front, big companies including Alphabet, Amazon, AMD, Novo Nordisk, and Qualcomm, they are all due to announce their latest quarterly earnings throughout this week. Elsewhere, ExxonMobil announced better than expected quarterly earnings last Friday, and its income in the fourth quarter also came in line and even better than expectations, thanks to increased production in the Permian Basin and Guyana. But ExxonMobil's earnings from the energy products unit dropped significantly, and that was due to weaker refining margins and reduced global fuel demand, especially from China. Now, ExxonMobil also reduced its share repurchases, and Donald Trump's tariffs won't necessarily be good for US oil stocks. I'm telling you, they will likely further squeeze these companies' profit margins and weigh on their valuation. So risks here remain tilted to the downside, and ExxonMobil dropped 2.5% on Friday's trading session. Now, of course, the picture is much more terrible on the Canadian side of the border, as the 25% tariffs on Canadian oil imports toward the US will make the European and Asian exports toward the US much more competitive and very quickly. As such, the Canadian Imperial Oil, for example, shed more than 6.5% on Friday, and other Canadian oil companies were severely pressured as well, while Saudi Arabian oil is just 0.18% down in Tadawul this morning. And as per crude oil, the price of US crude jumped as a knee-jerk reaction to Trump tariffs, as Canadian and Mexican crude oil imports toward the US are particularly impactful, given that these countries are among the biggest suppliers of crude oil toward the United States. But the gains here remain short-lived above the 200-day moving average, and the price of crude is back to Friday's closing levels, as the shattered prospects of global growth with Donald Trump's tariffs will likely outweigh or counter the geopolitical risk and keep the upside potential limited. Brent, on the other hand, is giving quite a different reaction to Donald Trump's tariffs, as Brent is less exposed to the US trade policies. While Brent is expected to follow WTI due to general market sentiment, we expect that the effect should be less pronounce on the price because its supply chain is not directly affected by the US tariffs. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.